Hey everyone, what is going on? So we are back. We are here. Happy New Year to everyone who is tuning in. If you're new, welcome, welcome, welcome. This is literally a phenomenal time to be in the markets. Now, I'm actually looking at this is my watch list for next week. So I've got my top 6 by additional pairs. I've even got an extra pair in there, which is usually I put my indices in extras. And I've got the JP225 and SPX as well. But most importantly is the DXY. Look at that phenomenal run. If I look at it holistically on the monthly for a second, if we just have a little look at how it's been performing over the past 3 months towards the end of the year, really interesting price action. And I think this is interesting because we saw something quite similar in 2016, where towards the end of the year we just had this rally and it moved up to the upside over here. Similar, moving into beginning of the year, we kind of just really started trickling, and then we moved up in 2022. During 2023, we did consolidate through the DXY, which is interesting as well. But what we have seen previously is that when we do get into these bear momentum cycles, things can really be aggressive. And we've been stalling in this area of this price for some time, and really call it during the most of this recession as well. So that's something which I'm finding quite interesting. When I am just looking at it from a trend line perspective, things are looking pretty good. But then as I mark this up over here, what do we have? We have this really interesting sort of price action where price is just basically in this sort of squeeze right now. It does give strong indication that we could be moving to the upside, only because of the size of this consolidation in comparison to where this is and that, where we could just potentially be seeing this, a strong push up, and then price either rejects from here or just continues, gets to this area and sells. So I'm not going to hold any strong bias. However, one thing I do like is as we go here and we look at it from the weekly perspective, what do we see? We kind of see more of a sort of impulsive push up, filling this gap. We kind of tapped into it. We failed to respond, and then we came back up, and now we've broken above, washing out any potential stops in these areas. I think that's more than enough in terms of a washout to see that play. If I then go into the daily and we have a little closer look, we are borderline just retesting the back end of this side here as well. So from a strategical technical point of view, what I am seeing here is that we are basically in an area where if we do get a strong rejection, and this would be primarily weekly focused, if we get the next weekly rejection and it's somewhere back down here, that could be a very positive sign that we are then going to see the follow through coming in for the weeks ahead. So that's something that I am going to be paying very close attention to. However, at the same time, I'm not going to take my foot off the gas and just wait for that weekly candle. I am also going to stay vigilant, because as we've seen previously, sometimes we could get a huge weekly candle, and if we just wait a whole week for the candle, what if the candle ends up coming all the way down here? Now, would I be surprised? Absolutely not. Would that still be good? Yeah, absolutely. There's phenomenal opportunities to still follow through after that, depending on how it closes. But then more than likely, I would still want to get involved in these areas. So keeping it very simple. Obviously, we know that we've broken above this area. I would really want to see continuations below this area. I mean, that would be really confirming in the sense of looking for the shorts. However, for now, we're still hovering in bullish territory. We can still do a whole number of things, and I think it's very easy to speculate in this area. We could create continuation in this area to then move higher, and then it just creates another phase where you separate this and this, and then that becomes one of its own, and everything is just kind of becoming one of its own, and it's continuing to the upside, which makes sense. Another one is this just becomes something a little bit larger, and then we end up going, and then it's just something which is just very messy, or we come all the way back down, and then we do whatever and we end up moving higher. And then when you zoom out, you kind of see this as the consolidation playing the back end of all of this, and then you get very strong momentum that really pushes to the upside and then meets that area. So again, multiple variations of what we're really looking at, but I think for next week I'm keeping it very simple. I'm looking to see if the daily just stalls, and then upon all of this news we then get a solid push down, and then I'm looking for continuation to form. Now, forms this week, next week, it doesn't really matter as long as I'm patient and I'm preserving my capital well enough to take advantage of something like this. If we did get something like this, I would 100% be all over that. Even if I took an additional stop loss to protect against this, which isn't completely necessary, I would still be happy with that because I've still got a pretty good run into this inflection area here. And then if we do follow through and continue to the downside, we could be looking at some really big targets. So again, there's a lot of possibilities on what could potentially happen over the course of next week, but really and truly, I think, moving into January doesn't have to, remember, we could sit here for the next 3 weeks before we even get a significant move. Moving into this year, we can see that we're positioned phenomenally. We just need to kind of see how price responds. The weekly is going to tell us a lot. And again, it's just one of those phenomenal areas. Not much to report on the SP 500. S&P 500 is just literally in all-time high territory. Creates a floor, moves higher, creates another floor, moves higher. What are we doing right now? We've literally just created another floor to then potentially move higher. So I wouldn't really be looking for a position here, but if we did get something like this and we moved higher and then that became your floor there, I wouldn't be surprised, would not be surprised at all with a position like that. Stop loss below there. For an S&P 500 position, I wouldn't be put off by that. It'd actually be better if we broke it and then you had the retrace candle in here. Ideally, probably a daily retrace would be more of a preferred one for me personally, but you take it in there, you see that daily close, it's looking really good, it's retraced the full candle, boom, you've taken your stop loss in here. Even if you wanted to go a little bit more aggressive, there actually is a more of a refined way you could take it over here. But then again, if you still can get in there with a 3-to-1, you're still in for a decent position, honestly. And with the S&P 500, what do we know? Look, for example, if I just take this one on over here, you getting over there, you can see that you probably aimed for like call it a 3-to-1 over here. I'll just crop that ever so slightly. You could probably borderline get in with that 3-to-1 there. You could probably get in a bit sharper if you really wanted to. Anyway, over time, it ran to around about 1, so you wouldn't be locking in anything. By the time it got to 3-ish, you could be more aggressive with 1%. And then as price eventually came up higher to these areas, you're then looking at 7-8%. Around about 8% for sure, I'll be locking in around about, at its most, around about 6.7, around about that region. I'd be more aggressive. So I'd be out of the market around about there. Some cases you may actually want to hold much longer, and you might just be loose and have it around about 5-ish, still get taken out for 5 in this scenario. But different situation, different time, you could have compromised. And I think this is where, if you're looking at the stop loss too much, this is where you could go wrong. And then over here, you're running around about 1.5. You could argue that you'd move to break even, but even so, and then eventually you've run for around about 3-ish over here. So at that point there, you'd move to 1%, and you'd probably have your stops around about there now, and just looking to play that for the continuation to upside. So like I said, there's strategies within anything. I think if you look at something long enough, you can actually find a strategy to work with. Now, this is one where I think, it's easier to draw these on when it's already played out, but identifying these points is very important. When you learn to identify these little hook points, you can actually then wait for these little pullbacks, sharp pullbacks, rejection, and then you can get involved, and it makes trading a little bit more easier when it comes to this particular type of pairs. Every pair has its own characteristics, but it's just something that I've been able to develop over time. And if you have been following this channel for some time, you've probably noticed that I always have the DXY, the S&P 500, and the JP225 on watch the majority of the year. Now, looking at the JP225, this one is also very interesting in my opinion. What I do like about it is, although that we've been continuously correcting to the upside in phase 1, phase 2, phase 3, phase 1, phase 2, phase 3, impulse correction continuation, right now we are in an area of interest where price is just very, very much just hovering. And it doesn't necessarily mean that price has to sell here, but price can stall for a very long period of time in range. And what I mean by range is it can just basically bounce from the top to bottom, top to bottom, top to bottom for some time. And sometimes it does it in this is called a bull flag, so you could do it in this sort of way, or essentially it could do it slightly different and both in expanding. So in this case, we can't really determine exactly what type of pattern this is going to be, but it is a bit more of a squeeze in terms of a smaller version of this. Looking at it from a weekly, we can see that we have actually tapped into a weekly, and call it more of a point of interest right now, because that was the last point where price just sold off and it reached liquidity. It didn't quite fill these areas, didn't necessarily need to. Looking at it from the daily again, as we mentioned, this could be the range. So if we're looking at this at the top of the range and these are the gaps and the near misses, we've now filled that. We've actually washed it out ever so slightly, and then we've had a really nice rejection from it. What do we see after the rejection? We actually see a bit of a continuation forming. This is one of the reasons why I genuinely think that having the JP225 as a wild side pair option is good, because when you look at it structurally, this has got all of the elements of a good trade in it. You know, you've got your base, you've got your two tops. Obviously that one was wicked, but it's still there, and now we're just gravitating to get to it. As you go into the 1 hour and refine it a little bit more, it's not your cleanest of instruments, I'll be honest with you. I mean, even when I put it on the line chart, you can see it ever so clearly that, you know, it's not your typical middle section. It's got a bit more of an expand to it as well. So it's a little bit messy. However, looking at it from a technical standpoint, even if you did get something like that, where you did come up and fill this and then sell insurance entry, that would be great, because then you can kind of argue the fact that you had something like this leading into that third point. Or more importantly, if it didn't and it just kind of just did that and it came here and then pushed down, gave you some sort of flag here, you'd still be able to play this into this point here, playing that A, B, C move, and then you basically look for an anticipation for this to just continue and follow through to the downside. So I genuinely think waiting for an insurance entry is your best bet on this personally, but you know, there's ways you take it. If you did want to opt in for that risk entry, I think it's there. It's just more of the riskier side of things, because when price gets to this point here, it can just easily turn around and then continue moving higher, and then you look back on it and you're like, did I kind of force that? This was just very messy altogether. I mean, the only time I would have really entertained that is if the flag came down like this, came back up, came down, came back up, near missed, corrective, gave you this sort of middle section, and then gave you like a 1, 2, 3, came in there, and then you had the nice rejection in there. Or if that last section over here was like a 1, 2, and 3, and then you kind of had it like that, and even though it was slightly larger, if you had something like this in there, it would just give it that little bit extra that's needed in combination with the middle section and everything. So that kind of is just the whole thought process there for myself. Really and truly, you're probably going to see a lot more of these sort of mechanics 101 sort of setups coming in this year, just because that's going to be primarily where most of my focus is going to be for Q1. As I've made a slight shift in my trading plan, it doesn't mean I'm not going to be taking my usual types of entries. It just means that I'm going to be more on the side of lower risk, sort of looking to really just scale and move. So, you know, things which have a bit more depth, which have a little bit more weight to it, things that really meet the plan, the criteria, you know, I'll be looking at stuff like that. Even if it's not the cleanest, I'll still read through it and then be able to kind of explain it, but that's what I'm looking at. So let's jump straight into it. So I'm going to be going through my top 6 and my wildcards. Okay, so New Zealand US dollar. Do you know what? I was on edge with a lot of these US dollar pairs, because you know there's a bit of subjectivity around the DXY, but when you do look at them, isolating them as their own pairs, they are in a clear run. So even so, I think with the deliberacy of this near miss here and where price is kind of positioned, I'm not going to really just dismiss a continuation to the downside, especially if it has criteria like this. So if we look at it from the daily as well, we can see that we're really moving to the downside. We have that near miss gap over there to the downside. We look at it on the 4 hour, we can see that we are within the range. We've left a little near miss there. We have 2 bottoms. This is kind of a really nice trade when you do look at it. And you can see if we, however we come back up here, either if it's very sharp, still wait for the insurance entry, or if it's corrective, wait for the insurance entry. Either way, the insurance entry could be here, or it could be further down there. Doesn't really matter. Obviously, if it's further down here, we'll wait for a little bit more weight on the flag compared to something which is a little bit higher. But all in all, zoomed in on hourly, if it shows and presents like this, perfect. You know, something like this is actually what I'm looking for. If I just can grab the mimic tool, there it is, and if I can find something like that, that genuinely just kind of fits in there, that would be perfect. So then I've got something pretty much just like that over here. I can take that for the short and I'll be very happy with it. I think where the real patience comes in is in this area here. Just really wait for that washout, that takeout, push back in insurance entry, let it do its thing, and then when it comes in, be extra patient, wait for that insurance entry, and then take it as it comes. I think that would be perfect. The only time that I would really be put off with a risk entry or insurance entry is if unfortunately we fall into high impact news. It's the only time I would just have to let it go, and these things do happen, and I accept it as a part of the game. I'm not going to try rush into a position just because everything's there and the news is there, especially not on funding. On personal capital, it's something that, you know, depending on the news, I will make a personal decision on that. But when it comes to funded capital, it's definitely not worth the risk. Just stick to future trade setups which are outside of high impact news, because things like NFP, CPI, they only come once a month usually, so we're good. Going into the next one, Australian US dollar, exact same thought process, but the only difference is we're hovering just at the high value area low. So we can see here that we've just really sold off, which is great. There's nothing to say that we just don't continue and follow through as well. Now, will we come all the way back down to the downside there? It doesn't really matter. Probably be out of the market by then, but truthfully, we're hovering at this low. So what I want to see is that we still leave that little bit of a gap there. We make our way back up here. We feel this, it'll be more for two touch, kind of giving it that sort of scoop. And then from there, we get the push, the insurance entry, and we sell. And this is exactly what I was saying with New Zealand US dollar, is that the push might be a little bit more aggressive, but then we wait for that insurance entry and then we get positioned accordingly. Would I take a reduced risk entry? I wouldn't mind as well. Only reason being is because I can still get the risk reward of a 3-to-1 to the low of that pattern, just about. And ultimately I'd still be okay with that. If I couldn't get the 3-to-1 into the low, then I would be skeptical and I would just probably leave it. But more than likely, I'm a risk entry type of guy. I'm going to wait for that. I'll see if I can get an 11-12 pips on Aussie US dollar. I'd love that, and that would be great, and I'll just follow that through. If we do fall into high impact news, as I forecasted, unfortunately over here, unemployment rates, yeah, I'd probably just stay out of it. Unfortunately, I'm probably just not going to touch it. But again, it doesn't really matter. It's not about the profit, it's about following the discipline, and I think that's more importantly. And there was this very interesting thing that I came across, which was you don't want to reward profit, you want to reward discipline. And I thought that really hit me differently, because in many ways you want to realize that it's the things that you build, the processes, the routines, the disciplines, the patience, the resilience, all of these things that ultimately as a side effect translate into you making money, scaling up, and so forth. It's not the fact of you made profit today that makes you a great trader. It's actually the fact that you can do everything else really well, which is very funny when you really think about it. Going into the next one, I've got GA now. I think GA is most probably the second favorite one I've got on watch. I think in terms of first favorite, probably I think it was Aussie CAD. Yeah, it's somewhere borderline in these, but GA is definitely one of the favorites. So if we look at it from a weekly perspective, what do we see? Not the cleanest, I'll be honest with you. From an outside perspective, it's not the cleanest. However, we can see here that psychologically near miss, and then we did the same thing again on a smaller scale there. But what we can see here is that actually, how did we approach this area here? Now, this area is quite far away. When you do measure it from how much it missed, it was borderline about 500 pips. So really and truly, it's not really a near miss at all at this point. It didn't even get close. So we're okay for that. Unless we see price really turn around and comes back up here, then, you know, we can really say that, you know, price is really messy. It's probably going to gravitate to the upside. But for now, we could still be within this range. We could still come all the way down here, fill this little near miss gap, and potentially follow through to the downside or retrace and then come back up and tap into this high. Doesn't really matter as long as we can get positioned well. So what do we see from a technical point? We can see that price is in a range to the side. We've broken the high, we came back into the range, continued with the correction, and then we came up with a 1, 2, 3. We then hovered in this area, and now we've had a confirmation in terms of bigger players stepping in. Is it enough? Well, only time can tell, really. And we do have a follow through, and we haven't immediately retraced back up, which is a good sign. If we look at it from the weekly as well, we can see that the weekly did close bearish, which is leaving that evening star sort of formation, which is again is really good. We go to the 4 hour, and we are consolidating below all of that, right? So what I do like is that it's basically retesting the back end of this in the form of a continuation. So what I do want to see now is that this continuation has enough weight to it. I don't want to just take something which is like not fully developed, squeezed. I want to be going into it on the 1 hour, and I want to see it create two bottoms, eventually come up for two tops, push down insurance entry, and I'll get in for that sell. If it develops into a 3 touch, then I'll get repositioned on the 3, but ideally the 2 is what I'm looking for. So I'm hoping that it's not going to be an early London session trade, which then ends up this being the structure, and then we actually have enough right now. And this is also very possible. We have to understand that then this becomes the structure, and then it just commits from here, creates small consolidation, and just sells. But ideally I would like to see something like that, where we sell, create the bottom, come back up, retest this area, small down, push down, insurance entry, and then we go. And that would be a phenomenal position for me. So that's what I've got on forecast. If this smaller correction happens to be the one, then I'll wait patiently to see how price develops. If we come back down here, create the next continuation, then so be it. I'll look for the next continuation down there, which could fall into next week after. But like I said, let's not over speculate it. Let's wait and see how price develops. EA is pretty much the same as GA, I'll be honest with you. The only difference is that when you look at it from a higher time frame perspective, we didn't kind of fill these areas. There's still big gapping there. We responded from a small little consolidation point there, which arguably was the origin of the big sell. Big sell came up, left a near miss, pushed down. We didn't quite fill anything, came back up, took out that liquidity, which ended up being the V shape, pushed down, came in, left a small gap, retraced, came all the way back up, borderline 50% of this overall range, and then we came back down, filled that gap, left another gap to this side, which is completely fine because we tested this 3 times, and then we pushed up to the upside impulsively. We dramatically came up there to only retest this, take out the near miss that we originally had, and now because we borderline broke above 50% off this overall range, there's a level of neutrality there. So I then look at it on the 4 hour to then see a little bit closer of how price developing, and again similar thoughts to how we saw GA. We've had the push down, it's really nice momentum to the downside. Are we consolidating? This isn't enough for me to say I'm looking for a short. As we saw, if we compare GA to EA, that's not really a continuation sort of structure that I'm looking to go short on. I'm looking for something with a little bit more weight, something a little bit more confirmed, something that's going to really just kind of hit you in the face and say, look, this is literally hovering, waiting for you to get positioned, and then I'll wait for the confirmation where we've got the 2 bottoms, 2 tops, push down insurance entry, and then I can actually see them both side by side, and then I can make an informative decision when the market is shaping up on which one I get positioned in. My preference is GA over EA. However, if EA presents itself to be cleaner while GA is just kind of, let's say, sold off, then I will go with EA, but GA is the preferred pair. Aussie CAD is also a very nice pair. If I look at it from the weekly, we can see here that there isn't really any significant area where price has just responded to, so that's the one negative, where we could just respond to this area here and then move back to the upside. So we're not looking at extreme long-term position. However, if I do look at it like this, it does seem like this was just kind of a very messy phase 1, phase 2, phase 3, and then we come back into this area and it becomes like a part of this overall range. Again, it's not something that I'm in favor for. However, what I do like about this is when I see it, it's definitely moving into a value area, and the question is, if it's not going to respond from here, it's not going to respond from here, and it's just really channeling like this, accumulating a lot of value, where is it going? And is it accumulating to carry on going to the downside all the way down here? It's possible, or more probable to tap into these areas. So understanding that, we can see when we did pattern separate this overall trend, which I'll just briefly just kind of tap onto, is So you've got this little bit here, which then taps into here. Oops. And we've got this little bit that kind of just retests the back end of all of that. And then you've got this overall, this is one piece of its own, which is all within there. And then you've got this piece of price. So again, this has many layers to it. Then this is separated into its own piece over here. Then you had something like that, which again, you had this, which kind of just met with these areas, sold off, hovered, failed to commit, sold off, broke the low, created continuation, hovered, left a little footprint there, tapped into it, sold, came down, and now it's coming up. But then if you look at the makeup and the layers of this last isolated part here, because technically what that's doing is it's retesting the back end of all of that, which is then retested that already. So it's basically just retesting the back end of what's happened previously. So this is our main area of interest right now. So when we're looking at this right now, what I'm really seeing is we left this footprint here, this small consolidation, we pushed away, came correctively, scooped up, left a gap to this area, took out a little bits of liquidity there, which is very minor, sold off down here, and now it's coming back up to then potentially V-shape and tap into these areas, giving us this is the most probable right now where we get something like that, and it comes up, taps into that area, pushes down, gives us an insurance entry, and we can sell it into that low, or a 2-touch, or we get something like this where we near miss this now, we sell off temporarily. Throughout Tuesday, Wednesday, we're moving back up. We then fill this, and then towards the end of the week, Wednesday, Thursday, Friday, we then get shorts, and then we end up getting able to get in with an internal 1, 2, 3. We've taken out the liquidity in this area, washed it out, pushed down, gave us the insurance entry, got in for a refined position, 12, 13 pips, whatever, and then we can play that for a 10% trade into that low. Again, psychologically, that seems very, very, very easy, but it requires a lot of patience and discipline as well to be waiting for that and to understand exactly what you're looking for. That's why I think waiting for the insurance entry is going to mitigate against a huge, huge amount of bad trades that could be taken, especially these risk entries. You don't want to be risk entering this a lot of the time. This one with the internal 1, 2, 3 is possible, but again, it's one of those ones where it's towards the bottom, things can get a little bit messy, it can just push a little bit higher, come in like that, do this, and then over time it just gets very messy, and then you're looking at something like that and you were thinking, well, hang on a second, how did that happen? And then you're looking at things a little bit more crazy, and we're not here to speculate all of this stuff. We don't really care. We just want to trade what's simple, and this is just very simple and easy. So waiting for that mitigates against a lot as well, and I think that's one of the better things in this particular scenario. So that basically covers it for the top 6. Obviously you can see that wasn't really a top 6, it was the top 5, but that was basically the better side of the pairs that I had on watch this week. Going into the additional pairs, I've also got Euro New Zealand. Euro New Zealand is nice. It's not the best of pairs, I'll be honest with you. It's kind of just average. But the nice thing about it is that we do have the subjective 1, 2, 3 into this area, and now we're pushing back down to the downside. We did have some pretty good momentum kick in. We then had an indecision candle and the wick from that momentum candle. So those were the only negatives. I'm not really too convinced with a continuation in this area. Now it's very possible that you get something like this where you get your continuation and then everything fits like that and it sells, but I'll be more inclined to wait for price to kind of break, get lower, create continuation, and then follow through when we're really more confirmed for more shorts. I don't want to be jumping into any sort of average position in these areas, just because we've kind of near missed this area, and we didn't near miss it by a huge amount, but we didn't near miss it by a lot. It's about 100 odd pips. It could still make its way and gravitate to the upside, and if it did something like this, and then it kind of came back down and did that, would I be surprised with something like that? Not really. I don't think that would be the situation, but even so, we could still have something like that, and then you look at it differently and you're like, oh, hang on a second, that's even better than what we originally thought. etc, etc. So I don't want to dismiss the long, but as well I want to take a short that really invalidates the potential for this to turn into something that could be an ascending or an expanding into that area. Of course we can't mitigate against every scenario, but we can definitely wait for something which definitely just invalidates the idea of looking at those. What's nice about the continuation here though is that it's basically below all of that consolidation. So if we did get something in the area, it's basically retesting the failed continuation reversal area here and then confirming the short. So a trade there isn't wrong. I think it's situational. I just think that a trade more confirmed later throughout the month, maybe later in the week, could be way better than taking something in there. GN, again, you know, you've got it marked up. It looks like it's ready to go. I don't think, in comparison, I think GN is way better than EN, just because if you look at it here, if you look at that as the area of liquidity that it filled, that gap, it kind of squeezed, it's done its washout, it's really taken everyone out, and now from the weekly we're getting the rejection. If we get the continuation below, and that ray line is below this point over here, if we start getting continuations below there, it's even higher probability. What I would like to see is just to follow through. So say that is confirmed, that's then followed through, we're down here, and then we get continuation. I'll be way happy to take that, and then I would manage semi-aggressive into this inflection point, only because that's kind of forming as a base right now of the start of this move here. It doesn't look like your typical sort of larger flag, but I would just, if it's running around about 2.3 because of whatever stop loss I got, 2.3, or call it, even if I got in for probably a more sensible stop loss over here at 5%, I'd probably go in around about 2% there at least, just mitigate back into structure there in case something a bit crazy happens, and then manage accordingly after. I am still looking at shorts. It's just, you know, with these little inflection points, you don't want to just get too aggressive and get tagged in and out, because I am looking at the bigger picture. And really and truly, you then zoom out and look at it here. You don't want to mismanage your trade all the way up here when you've got, you know, so much potential where price could even come down for 10% there. And then if it does really follow through throughout the months, which you probably won't hold on to this 33% trade, but really and truly, you know, a 10% trade into that is perfect. So you're compromising, you know, you're basically shortening your trade way too early before you even let it play out, and there isn't very many reasons for price to respond from any of these areas. So I'll really be keeping my close attention not on just this area but this area here, and then see how it follows through. Probably get a large continuation on that area that acts as a hover on the base of this ascending over here, and then we could then play the bet off the next trade here and then take that short. So I think GN definitely above EN. That could easily actually be a top 6 pair. Really and truly looking at it, because of where it's formed, it's just going to need a little bit more time, and I'm seeing it more as a late week, Wednesday, Thursday, Friday sort of trade, but we'll have to wait and see how that develops. New Zealand CAD, so I'm looking at this more as a reversal play now, as a long-term sort of buy position. With New Zealand CAD, sometimes it does spend a bit too much time hovering in these down areas before it goes, and I've seen it a couple times, so I just want to kind of see how we respond from this area. If we kind of continue pushing to the downside and get more continuation and it gets messy, it is what it is. There's two ways I'm looking at it. So understanding that this is where the floor is right now, price has left a little reference point there. If we create a larger flag here, it would have to be a 3-touch continuation to go short. If it's going to be a breakout to the upside, if it's a breakout to the upside, we're going to have to break above this area, push here, and then when we get continuation above it, we'll then have to be able to get positioned in here, and maybe 20 pips is actually more than enough on New Zealand CAD, and you'd get positioned for that impulsive move to the upside. And I think this as well is going to be quite a mega nice trade as well, depending on if we get the follow through and the commitment. But overall, that would be a fairly simple one. Even if it's created a floor down here, it's really tested the low and then it's broken the above, and it kind of invalidates a lot of these scenarios. Like, it's unlikely you'll see something like this where then price will kind of just play against you and do something like that. That's very, very uncommon to see something like that happen there. But again, it's not the best trade, but it's definitely one that you wouldn't want to let go, because given the circumstance of this then breaking to the upside, we're basically playing the volume of all of this accumulation, and then everyone's going to be exiting their positions for shorts at this point. All the longs will be in play, and then we start seeing price just really rally to the upside. So for that reason alone, I would want to get positioned for the long, but I think it'll be more of a strategic one compared to your typical sort of clean cut entry. As we see with New Zealand CAD, it could be something similar to this, where it's not your clear, but you have your base, and then you can mitigate against the base, and it does really respond well. So those are the sort of things that I'll be looking out for. As I mentioned, it could take a while. We could see this just correct for some time over here before we really get a push up and a continuation. So something to just bear in mind and be patient with. But definitely I'm going to be looking at either through or above that ray line. Euro USD, likewise. I do like Euro USD a lot. Really and truly, it doesn't look very clean right now. When I look at it from this perspective and I just see it, it just looks like it could be a whole load of mess. But truthfully, I think there's a lot of value in Euro USD compared to the DXY, because when you look at the DXY, you can see that key value area over here. You look at Euro USD again. I'm just going to bring that across here. Key value area here. In fact, you know what? Let me just pull that up and put it over here. And then we go to the daily. We have to then see it, and I'll invert that so it's similar to the DXY. We can then see that that was basically the point of where price just really began to sell. We've just tapped into it, but we really want to see a solid break above and push back in. So two things happen here. We either get that where we break above and we push back in, but then that means that the reversal for the DXY is in place, or we get the continuation forming just below and then it follows through to the upside. Again, it's one of those ones where I don't think I'm going to be in major preference for the Euro USD trade. It's just there in case something does shape up that maybe I kind of fell into, where we broke above, we created continuation, and it was just as simple as that, and it went. I'd understand that, and I'll still take that. If we, let's say, broke above, pushed back in with weight, and then we got something like this, I would still be in favorable to then take that like this. Obviously we're inverted, so I'll take it like that. You know, there's many different ways I'll be looking at this, but I think more realistically is I just want to see this continue, and I'm not too concerned about that point there. I'm not going to let that kind of discourage me from seeing the bigger move to the downside here on Euro USD. And then with the DXY, if it just rallies to the upside, then at least I know I'm positioned well for that short. So if we do get something like this, I will be more than happy to get involved. And in comparison with how we saw New Zealand US dollar and Aussie US dollar, you can see that Euro US dollar is also in line with it. So whilst those are correcting to the upside, this is moving up and down and correcting. I think the other one that would have really made it on here was GBP US dollar, but then I just felt there was an overload of US dollar pairs at that point, so I took it off. And another one that could have really made it was weirdly enough USD CAD and USD Swiss, but in the end I decided to take them off and just keep it very simple. So that's basically the thought process over here on my Euro USD thesis. Then I've got US dollar yen, which I think again it was between this one and GA to be the favorited ones for this week. I think personally GA does just take it as a better overall pair in my opinion, but GA is not my most favorited pair. So if it was any other pair but the same price action on GA would be number one, but I think UJ definitely takes it at this point. So what we do have here is we have a strong push away. We've basically broken that nothing, basically just broken that high, and then through it we're creating continuation. We have base 1, base 2. We actually left a little bit of a gap as well, which is nice. Now Can this still just continue to upside? Absolutely, but I would like to see this sell through, probably just tap in, break that low, push up, 4-hour confirmation. Could be a trade there as well, but then I'll wait for that insurance entry, get the refined position, and then hopefully I'll be able to get in here for like a 9 to 10 to 1, and then that would be a great trade in itself. And I think that's the real trade that I'm going to be waiting for, and then looking at this as the bigger move play where I could then be playing up into this area. That's what I would like to see, and that's what I would like to be trading into. So that's basically what I'm going to be looking at for next week. One of the other reasons I like it, it's just so simple. You know, it's so simple, so clear. The price isn't really messing about. It's really deliberate, very straight to the point. And I think those are the types of trades that, you know, in the end of the day, when they do shape up, they're really nice to take full advantage of. Again, you know, great price action throughout November. If we look at the trade here, even though that kind of broke a little bit higher, it wasn't really the best one. Limit play could have been, no, a pending order would have been your best bet. Difficult one to catch, and then that would have ultimately ran for roughly around about 5%. You'd be out for about 3-ish. So yeah, I mean, it was an okay trade there. I mean, I could see it. I think this is going to be an even better one, so we'll have to wait and see. And CAD Swiss. CAD Swiss is great, honestly, for a pair that wasn't really traded much. You can see it's moving sideways within a range. As we know, this one can typically just move sideways for a very long period of time. But the nice thing about it is it probably will just move down, move up, move down, move up, move down. And you can capitalize between those if price action is there. Right now we're seeing structurally this is looking pretty good. What I do want to see is continuation. So we had a push down continuation. We left a reference point. We pushed down. We near missed that whole area. It's a large near miss. We also near missed the low to this as well, which is good. So we left gaps, multiple gaps on both sides, gap again, and then we came up and we finally filled that little piece of liquidity there, which you can see clearer on the 4. As we filled it, we then had strong 4-hour price action pushing back to the downside. The great thing about this is now that the idea of a continuation to upside is slightly becoming more invalidated as we come closer to the downside. I do want to see deliberate continuation now to get a follow through to the downside. So we have left a little bit of a footprint, which could be working at something like this. And then, you know, price does something like that, and eventually we get something like this. That is also a possibility, don't get me wrong, nothing wrong with that at all. However, price can then leave a new footprint, and then we basically work with that, and then that is the new piece of our price action. If you wanted to really protect yourself, you could do something like that with 22 pips. Nothing wrong with that. You can still get in with a 4 to 1 to the low. If you want to get in a little bit more aggressive, something which really fits, I'd say, you know, even with around about 18, you're good. I would want to protect against this and spreads and so forth. I think 10 would be the best amount, and then you just accept if you got taken out there, you'd have to get repositioned. It is what it is. So you'd have to basically anticipate if you were taken out, how would you get repositioned, and then maybe even take a reduced position size or whatever, if you want to. But anyway, I'm happy with something like this. Continuation down there. This ends up being the point, and then we just trade that in a separate little isolated price action, and then we take that into the low, and you've got like a clear 8, 9, 10 to 1. And that seems very, very simple. And then you're basically playing that as a range play into that low. Forget the anticipation for this to break through further. I'll probably just get very aggressive at this point as we approach that low, and I'll probably lock in around about 8.65. And then if it continues moving, great, so be it. If it doesn't, then I'll happily walk away with 9% on the dot right there and call it a great trade. The last one I've got on watch here is probably one that could really show promising. It's the Aussie 200. You can see from the daily that we are channeling to the upside still, which is great. You can see we're just squeezing, but we basically sold off, tapped into this low over here, and we started pulling back. So there's two things that I'm looking at. Is this the floor, or has this just given it reason to pull back and retest this area up here? Because essentially this meets with the retest here. So it kind of just gives me that idea that If we are going to sell, this was the beginning of the sell, but this is just leaving us room now for us to get the correction. If we look at how price is moving to the upside, it's not the most progressive, but it is impulsive. So we did have that strong push away. We had the phase 1, phase 2, and then are we going to continue? And then we don't get the insurance entry. The only way I see this as a potential way to then see a short is that we respond to this by breaking above, washing the orders out here, tapping into the retest of this. We tap into it, then we sell, we get an insurance entry in this area, and then we look to play it to these areas down here, or potentially it just continues moving into the next continuation, and then it goes, and then that ends up being a part of its own sequence in itself. So we can see this psychologically and logically that this is a very, very easy and simple sort of trade. We just have to understand that the makeup of this structure is more of a V shape, just an irregular one, and it would have been nice if we came up like this, had the 4-hour rejection here, and then we got the continuation. But instead what we're doing is we're coming up here and we're now doing this, or we're just kind of doing that, and then this isn't your regular sort of scoop. This is more of accumulation into something, so it's one that I'd be more vigilant with. That's why it's more of a softer watch sort of situation with it. However, if we are going to reject, these are the areas that we are looking at. So we want to see a washout from those areas, and then we want to see that push. If the insurance entry is down here, cool. I don't really mind either. It's just I'm playing it into that low and so forth. In terms of risk reward, depending on the stop placement, we're looking at anywhere between 10 to 15% to that low, and then we're looking at a potential 20% with it following through. But the 14-15% is usually the marker we're going to be looking at, and the go-to. So essentially that's it really. Looking at on hourly, we can just see a little bit closer. That's your reference point, the washout, then the push down. I don't really mind the fact that all of this isn't your best. However, again, I'm not going to be marrying any sort of lines like this where I'm anticipating something to do that. If it does it, so be it. It's just an additional low-level confluence to everything added, because that's subjective. But overall, then it makes sense with the middle section there and so forth, and then the push, the insurance entry. If that actually did happen, I'd be more inclined to take the insurance entry slightly higher over here and more on a 15-minute side of things. However, if so be it comes with rejection, 4-hour rejection there, follow through with a 15/1 hour flag with a 15-minute refinement to then take the short into the lows over here. Perfect. And then the only inflection area I'd be moving to break even for sure is that one there, but by that point I'd be running 7-ish%. So at that point now I'd move aggressively, probably to 5, and then I'll just wait and see how price responds to that area. So if we tap in there at 7, I'll move to 5. Last 2 trades made 20% on Aussie 200 last year, so hopefully going into this year, if we do get an Aussie 200 trade, it's also going to be very promising. In fact, it seems to be one of those pairs where when it makes money, it makes a lot of money, so it's a good pair. Guys, that kind of wraps up everything for this year. Look, this year is going to be phenomenal. I think if you're going into this year and you're wondering in terms of goals, planning, all of that, I've mapped all of mine out already. I've got separate journals, I've got structure, daily goals. Mark mentioned something about needle moving tasks. So something that as well, which is one of my daily goals today, is actually just going to formulate a really large list of all of my needle moving tasks towards my yearly goal and break them down into 90 days. So basically, yeah, it's something that I could really recommend. Like if you're trying to improve your psychology, you can go through a rewired episode every day with intention. If you're trying to improve your technicals, you can go through one of the technical videos every day and then just take notes and then isolate that time of your day where you're just really focusing on it, and it will compound. It does compound. Last year I did it and it really compounded, and I can hand on my heart say technically I'm really happy with what I know, but psychologically I'm not very happy on how I act on those technicals. So going into this year, I want to find that balance and bring my psychological mindset up higher so it can meet with those technical capabilities, and then I can execute flawlessly with those technicals. And I think it's all a process, part of the game, it's part of your journey, and just take it step by step. So guys, big goals ahead, big year ahead. Get your intentions, get your visualization and your goals on point, and really consider those needle moving tasks, and then try and incorporate 1 or 2 of those tasks at least every day. That's then going to help incrementally improve you towards getting to your ultimate goal. And then split it into 4 quarters. You got Q1, Q3, Q4 of the year. And in those 4 quarters, you can break down milestone goals that are then eventually going to help you meet to that ultimate goal. For example, let's say you wanted to have, you wanted to be thinking and acting in accordance with a consistent, profitable, successful trader. In order for you to do that, you need to establish what sort of traits, what sort of daily practices, rituals, routines, things they have, and then you just do those. And then be the best version of yourself. And I think as a side effect, you'll start receiving and getting the things that you can probably expect that type of person to be getting and receiving. And the great thing about it is, if you surround yourself with these people who do those things, you're going to get that level of accountability where you're going to be more inclined to do those things yourself. And I think one of the things that happened to me last year was I was blessed to find an accountability group with some more experienced students, where I was able then to see them be consistent in some areas of their trading. Obviously, I didn't monitor all the areas, but in the areas that we shared, and that I was able to then, as a side effect, be consistent in mine, because when I did feel like I was going to slip up, I saw that they weren't slipping up. They were cracking on. So then I felt like I wanted to crack on even more. So then I just put the extra effort and did what I had to do. And then I think the vice versa, when they probably had that feeling sleeping at any point, they were able to then just be like, nah, hang on, everyone else is cracking on, let me crack on. And that's how accountability really works. So find those partners for yourself, find those people that are really determined, really want it, and they were just relentless. I think being relentless is one of the most valued skills, because being around relentless people, honestly, it just puts you in a whole different mindset, puts you in a mindset where you just want to be a high achiever, you want to get shit done, you're going to keep pushing, you don't care if you haven't made money this year, next year, the year after, you're just going to keep on going at it, and then eventually you're going to slap that piñata and your success is going to just blast all over the place. So guys, have a smashing new year. It was great 2024, let's make 2025 better, and I will catch you guys in